Welcome back to Synaptic Dividends. We break down a new dividend stock every single week to help you build your passive income portfolio.
And if that's your goal, you're going to want to make sure you're subscribed so you don't miss a single breakdown. Okay, today we're diving into a company called Illinois Toolworks, or ITW. Now, this is a massive industrial giant you might not know by name, but I promise you their products they're everywhere. The big question we're asking is this Dividend King a hidden gem for your income portfolio? Let's get right into the numbers.
All right, first things first, and this is always the most important question we have to ask about any dividend stock. Is the dividend actually safe? I mean, can the company really afford to pay its shareholders from the actual cash it's making?
To figure that out, we look at my absolute favorite metric, the free cash flow payout ratio. Now, don't worry, this isn't some complicated accounting thing. It's super simple. It just tells us what percentage of a company's real cash profit, the money that's left over after running the entire business, is used to pay out that dividend. It cuts through all the noise and gives us the honest truth.
So what is that number for ITW? Well, for 2024, their free cash flow payout ratio is sitting right around 60%. And that number tells us everything we need to know. It's an incredibly comfortable level. Think about it this way. For every single dollar of pure cash profit they bring in, only about 60 cents goes out the door as a dividend. That leaves a massive 40-cent cushion to reinvest, pay off debt, or just handle anything the economy throws at them. The bottom line? The dividend is very, very safe.
Okay, so checkbox number 1, the dividend is safe. That's fantastic, but it's not enough, right? For our passive income to really take off over the years, we need a company that doesn't just pay a dividend, but one that consistently gives us a raise. So let's move on to test number 2 and see how ITEW's growth record stacks up.
Wow, just look at that number, 61. That isn't just a good number, that is an elite number. That represents 61 consecutive years of dividend increases. That is just an incredible track record. It puts Illinois Toolworks into the ultra-exclusive club of what we call Dividend Kings. We are talking more than 6 straight decades of giving their shareholders a raise year in and year out, no exceptions.
And this chart right here, this shows you exactly what that consistency looks like in action. You can see over the last 1 and 5 years, they've been growing that dividend at a really steady clip of 7% a year. But look at that 10-year number, an average annual growth rate of over 12%. That is some serious compounding power that can just dramatically boost your income over the long haul.
All right, now for the real test, the ultimate stress test. Any company can look good when the economy's booming, but a dividend's true strength, its real quality, is revealed during the absolute worst of times. So, how did ITW's dividend hold up when the storms really hit? This right here, this is what separates the good from the truly great. During the 2 biggest economic crises of our lifetimes, ITW didn't just survive, they gave their shareholders a pay raise. In the absolute chaos of the 2008 financial crisis, they hiked the dividend by 11%. And then again, during the 2020 pandemic, when so many other companies were cutting their payouts, what did ITW do? They increased theirs by another 6.5%. That's not just resilience, my friends. That is a massive statement of confidence. So we've tested for safety, we've looked at that incredible growth record, and we have stress tested it through 2 major recessions. Okay, let's pull it all together now and deliver the final verdict on ITW's dividend quality.
So let's just recap what the numbers are telling us. First, the payout is rock solid, using only about 60% of the company's real cash. Second, its history is absolutely elite, a dividend king with 61 straight years of raises. And third, its resilience is proven beyond a shadow of a doubt, with strong dividend hikes during the 2 worst crises of the last 2 decades.
So what's the bottom line here? When you put all this evidence together, the conclusion is, it's really clear. The numbers show that ITW's dividend isn't just surviving, it's thriving. This is a high-quality, battle-tested payout from a truly world-class company.
Now look, this was just a quick dive into the key numbers. If you want to go deeper and really understand the full business model behind these numbers, what makes them tick, their competitive advantages, check out our long-form analysis over on our main channel, Synaptic Investing.
And of course, if you found this breakdown helpful, do me a huge favor and hit that like button. And make sure you subscribe for more weekly dividend analyses just like this one. Thanks for watching.